The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour right here on TFNN.com. And don't forget, you can listen to us on the go on your mobile phone at TFNN.mobi. Watch, of course, the trading screens over at Tiger TV at TFNN and broadcast live now inside the e-Signal platform, which has access to over 50 different brokers. All right, let's check out where the markets are at right now. We got the S&P is currently down 6 points. We have the Russell down 7. NASDAQ is down 20 points. The Dow down 20 as well. Copper is currently pretty flat on the day. Well, just a little bit. And we got gold is currently up 18 points. We got silver is currently up over 1%. So some nice moves, almost 2% moves on silver. So some nice metal moves today. Looking on over at our energy markets, we got a 4% move on natural gas. And let's check out oil right now. And oil is currently, let's see here. We got oil currently up $1.59, a 1.5% move. So we're getting some nice moves there in those commodities. Corn and soybeans, the ags, they're pretty flat. So we got corn just up a quarter. And we have soybeans down $1.75 right now. Pound dollar right now is down 33 pips. The euro dollar is down 3. Euro pound's up 13 pips. Pretty quiet in FX. Dollar CAD's up 5. Dollar franc is down 8. Dollar yen down 30. Pound yen moving big, down 94. We got euro yen is currently down 56. And we got the Aussie yen down 27 pips on the day. And that gets us caught up on current midday market watch. Now, today we're going to talk about a unique trade. And before I dive into it, I want to see if there's anything else I need to cover, but I think we got it. And let's see here. Today we had natural gas, we had Philly Fed. Tomorrow we have a variety of Condor releases coming out, so make sure you're aware of those. Canada CPI, core CPI, wholesale sales news coming out at 8:30 tomorrow. So we're looking at an 8 a.m. entry to a 10 a.m. expiration for a minimum profit of $30 on the Iron Condor that's buying the lower spread and selling the upper spread. All right, so with that said, let's go ahead and pull up a couple charts here. And we'll walk through this one piece by piece. And let me see here. I'm going to change up my template. We're going to go over to do magnet pricing, but I'm going to have just 5-minute bars up. And I'm going to change this now. We're going to look at the NASDAQ. So let's pull up NQ. And start putting the pieces together. All right, throw that on the left side. Now, I'm going to open up another chart. And this one is going to be Google. So on Google, I'm going to throw up 5-minute bars as well. And I'll go ahead and pull up my magnet pricing, but again, I'm going to stay on 5 minutes. And with that done, now I'm going to get rid of my deviation levels. I didn't think about that. It doesn't like those because we have to use average deviation. So 1 second, I can change that around instead of implied. All right, there we go. And once that loads up, 120 days, not giving me 120, huh? Let's see here. Well, let's try to add some to it. So with holidays, because I feel I basically configure most of this stuff for futures and everything else. And let's see if we can get some more on there. Apply that one, see if that works. If that doesn't work, then I have one more update I can do. It'll just take a couple minutes, so I'll probably do it during the break. There we go, that worked. Okay. And so I'm going to put a little note down on the side. See, so it loaded. Okay, so sorry about that, but yeah, man, look at that spike right there. Nice little spike going on in Google. We're going to go ahead and put in, now that we got our charts working over here, now let's go ahead and let's add on our spike striker. Okay, so we're going to put that one on there. And once that's done, we're going to add that to Google, just to keep an eye on any volume spikes that happen, and just sort of lets us see how things are lining up on the day. Such as today, we had a 10-minute volume spike when the Nasdaq hit the -1 deviation level, popped it, spiked it, reversed it, exactly like we'd expect it to. One thing to remember is often volume spikes will become magnet levels. So that's a hint for later in the day. Okay? Check out what happened over here with Google. Flew down, -1 deviation. All right? And then what did it do? It popped right on back around. And I want to see, as soon as that popped back around over there, we got, I'm trying to see any news we want to look at, but it bounced right off. Google also bounced right off 1 deviation. It did a little bit later. It did it about 1 o'clock. Nasdaq started bouncing right around 12. So a little bit different. But just going in. Here we go. Live news. That's what I wanted. All right. And I'll pull that up. There's a bazillion different places you can look for stuff. And so if I want to go over here and look at what's going on, see what kind of it's basically what reports are flying out. Most of these are going to be this again and again and again. EU regulators invite Google to discuss the right to be forgotten. That's not news. Google earnings, watch for cost, watch for ad pricing, etc. Sort of saying, on Market Watch over there, Wall Street Journal's Market Watch. They report the third quarter results after the closing bell on Thursday, with Wall Street expecting solid gains in revenue and profit. Here's what else investors can expect. Earnings are expected to post a profit of $6.23 a share, compared with a net income of $4.78 a share in the year earlier period. That'd be a massive bump. And let's see, that's according to the consensus survey by FactSet. Looking on over the revenue, is expected to report a revenue of $12.3 billion, up from $11.1 billion last year. Google shares took a hit in April after the company reported a jump in expenses related mainly to its $3.2 billion acquisition of Nest Labs. But the stock has recovered since then, rallying about 5% in the last 3 months. Some key areas to be checking out that investors will be looking at whenever the report comes out will be the expenses and profit margins we're coming out to focus on in the second quarter. So basically, what were their expenses? Because that was an issue last quarter. What's their profit margin with everything going on? They're going to pay attention to trends in ad pricing. So the growth of the mobile ad business, how is that going? has also meant lower ad prices, although that's expected to stabilize with the more integrated system for digital ads. Basically, the more stable they make the system, the more possibility they think there of that revenue starting to really pick up. They're expected to report another quarter of strong growth, underscoring its position as the dominant player in online advertising. He is instead of the. Despite worries about cost and margins, investors have generally been supportive of Google's bid to expand to new arenas, shown by the interest in Google Fiber and Google Glass. I wish we had Google Fiber here. I have some traders I know that have Google Fiber, a gigabyte a second, just flying. Literally, I mean, a gig a second. And Google Glass. So that's it, two big things that people are excited about. They just expanded that ad on another city. I'm sure they'll be talking about that on the conference call. And it's bid to expand its presence in e-commerce. I've actually got hooked up with Google Wallet. I know a lot of other people are getting hooked up with that. It is very cool. It's free to send money. It's not like PayPal where you have to pay a fee. They're tying it in. I mean, I paid for my pizza the other night with Google Wallet. And you go to, like, there's places all over. You can go to 7-Eleven, pay with Google Wallet. So there's all different things. They're tying into a lot of different e-commerce stuff. So that's going to eventually become a bigger revenue generator for, you know, they get in the commercial side of things. And what's really smart is they're letting all the users get onto it now with no cost. They'll send money back and forth before they go real big on the commercial application side. Let's see. FBR Capital Analyst initiated coverage on Google with an outperform rating and price target of $674. That'd be a $100 jump. Last time we had that, we had an insane move. Okay, on the NASDAQ. Google offers attractive exposure to each of the key structural growth areas of the internet: search, online, video, mobile, and the app economy. So, I mean, that gives you a nice just outlook on sort of what people are looking for, and, you know, the potential move that some people are thinking may happen. Let's see. Okay, so it's supposed to move up 100 points, but the thing moved down. Well, that can happen, right? So if they expect a big move, and it's almost like somebody thought the move was going to start right here, and you see this just pop and drop right back down. But why not buy it as low as you can before it runs up 100? So drive it down first. Not an abnormal thing to happen right there. So looking at the settlement right there, we've had the market drop on down, had a spike, that one deviation. We got NASDAQ sitting right at 0.5. Probably a good time to hop in and see, just to see, at this point, is there a good opportunity to get ready for a strangle? Now, what am I talking about a strangle? Like Nadex, I trade Nadex all the time, right? TFNN.com, hop over, Nadex banner right side, get set up. And, you know, feel free if you haven't already to do that now. So again, that's TFNN.com. Right side of the page, Nadex. In the commercial break, right now, go to demo trading account. Fill in your information, click apply for demo. You can log in, you can follow along with us and demo and see how this plays out. We'll be back right after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, going back here to the Diagnostic Trading Hour. And so let's see what we got that we maybe can do something with here. And just setting a couple things up for you. All right, so we're using the scanner. Make sure if you haven't got the scanner already, you can check it out over at TFNN.com. You can check it out for free right under the left side of the screen. Just scroll on down there, click on Diagnostic Box Spread Analyzer. Also, the Binary Analyzer. Both are included, and at the deviation levels that you see plotted on my chart here, you get those so you can plot them on any chart that you want in any platform. Okay, so looking at what we have, first thing I'm going to do is I'm going to go just to the binaries. That's usually where I'm going to be trading most of these. I'm going to reset all my filters. We'll move down a little bit. Only market I really am interested in right now is the NASDAQ. So I'm going to turn everything else off, and we're going to go down here and just look at it. Also, I'm really only looking at the end of the day, so I'm just going to click dailies. That's going to drop off all those intradays and weeklies for me, so I'm not even wasting my time. I am actually going to leave on all the stuff from top to bottom. Notice how full this price letter is. Usually it is not this full, okay? So now I got to start analyzing some prices. And let's pop that over to the left side, and let's look at it, see what we got. Okay, so just to help myself out, I'm going to go in on a -1 deviation level. I want to mark off what is that. Okay, so right there, that is a -1 deviation. Okay? And what is a positive deviation? Basically 39.22, so somewhere between, here and here. Okay? So we're going to be basically right around those points for a minus, or that's basically up, or, okay, that's settlement, and that's -1. Why do I bring those two up? Because they're both equally basically half a deviation away from where we're at right now. Okay? So that always gives me a clue on that. Now I can go a little bit deeper and wait. Well, 38.80 is as low as we're going, so don't have to worry about that at the moment. And now I can look up. Okay, so now let's look up on here. Let's see what we got. Let me find what 3 deviations is. 40.34 would be 3 deviations. And if we got 100 points, we'd move quite a bit over there. 573. Yeah, we could have a pretty massive move. But just so we know what a 3 deviation move is, 40.34. We don't even have one up at 4.34. So that doesn't matter. Now we're going to go down and go, okay, well, I don't care about these $4 ones. Okay, not at the moment. Because there's one for 425. Don't really care about the 425 one because there's one for 450. Don't really care about the 450 one because there's one for 525. 625, yeah, I start, at this point I'm going to start caring a little bit more. I'm about 25% higher. I'm 50% higher on 6 versus 4. So the closer I get, the more probability I have of that contract expiring in the money. And that's why that's so important to me, okay? I really want this thing to expire in the money. That's where the big money's going to be at on this trade. So there are a lot of ways to do this trade. I'm just going to cover one of them with you. And it looks like NASDAQ's moving on back down. And let's see, 38.80, where's that going to put us out on the downside? Let's see, 38.80, that's going to put us just below 1 deviation, right where we had that volume spike, which will act like a magnet price, okay? And so would not be surprised to see it push on back down to that. So there's like I said, there's a couple ways to do the trade. The way that I like looking at it is going in and going, okay, what can I put on and make some money that I can use to risk on other levels? And right now, it's sort of expensive. So I don't like the fact that it's $20. I'd much rather be seeing, like 10s and 15s, half a deviation away. So it's pretty high right now. If I put on one of these and I'm risking, 17 here and I'm risking 19 here, then, what is that? We're putting in $38 on the trade. Not quite 38, but pretty close. And so what I can do is I can open up Excel. It is every trader's best friend. If you don't get it, you don't have it, you don't understand it, you should spend some time on it, okay? It'll make you able to do a lot of math really fast and ensure it's accurate. So I'm going to go up here, and I just want to look at a couple things. I'm going to go, okay, well, if I risked, 19 on one of these, and if I risked 16.75 on another one, be at that, 35.75. So if I took profit at like my 43.57 level, and that's only going to give me $8 for my next level trade. So can I take it further out? Let's see here. They're putting that half deviation. They're putting it really close.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, going back here to the Diagnostic Trading Hour. And so we're looking at a couple trades, and what I'm looking at is buying the 39.24 at the moment, okay? And this will be my first entry. Now, I'm probably going to be layering into this, so I'll be adding on throughout the day. But at the moment, just to make sure I get that first round in, buying in on the 39, either 24 or 28. So we're going to, the more expensive one, 39.24. You get it for that for about $15 right now. The 38.84, you can get in that for somewhere between $15 to $17. It's been fluctuating up and down. So looking for about a $30 net cost of entry on the trade. You can also go out one more layer, okay, which really is not that far. And we got the 39.28, and we have the, what we got here, 39.28. We also have, so you may like this one as well, the 38.80. Okay, and these have a little more profit built into them. So looking at those, but pretty similar in pricing. But you can do $12 and $13. So you can do about a $25 trade on that trade right now. And so if we look at those getting in, maybe we'll pick that one as our second layer. Okay, so just so you can sort of see how this is playing out. and what's going on. Put them up here on the screen for you. And we'll put this in here. All right, so we got $13 on that one. We got like $12.50 on this one right here. Okay, so that gives us 2 trades right there. And now, so that's a second layer. Now, what does happen often is you'll see that Nadex actually can add strikes later in the day if it sees that there are not enough strikes. And so I'm going to watch to see if I can maybe get some further out ones that I can sell. Okay, right now, the best ones I can sell are, the lowest one I can sell is 38.80. So that's the lowest strike I can sell right now. And so we got that one out. Okay, so that's the 2 trades down. Couple to go, right? And sort of watching those do their thing. And now I'm going to let some time expire over the next, couple hours. I'm going to watch and see if Nadex adds on more strikes, because often they do. You'll see it on the notices page. Let me show you what I'm talking about. They only do this on the dailies, but Nadex adds additional strikes on a discretionary basis on July 7th, 8th, and 10th. So what they did is, pursuant to the exchange, Nadex added additional strike levels on a discretionary basis on corn. Actually, they did it on weeklies. So dailies and weeklies. They don't do it on intradays. On weekly corn and soybean binary contracts on July 7th, due to volatility in the underlying market, additional Nadex added strikes on the U.S. Tech 100, the small cap 2000 binaries on July 8th. Finally, Nadex added additional strikes on a discretionary basis to the S&P, the NASDAQ, small cap, Dow, and DAX on July 10th. Nadex returned to its regular listing schedule for these contracts on July 11th, 2014. So what does that mean? That means that instead of having like maybe their normal 20 or 21 strikes, they actually had 30 or 40. Okay? They added on additional strikes. So what I'm doing now is I'm sort of sitting back and waiting for those additional strikes to pop up and be available. And let's see here. So when they are, if they are, awesome. We'll just sort of have to see what happens on them. But I do want more layers. I want some really cheap layers. And the other step is I want to take profit on these trades. At least on the first layer, I'm going to be looking to take profit. But I'm going to watch a little bit to see where it goes. If you want the simple exit, the simple exit is when it hits your strike, get out. So if it hits 39.24, exit. If you bought the thing for $15 and you got out at 43, then what does that mean? That means that you made some money already, right? If it gets up there. So if you bought it for 15, it gets to 43, you made about $30 on the trade. And you lost 12 to the other side, you netted a profit. Let's see, if you netted 30 minus 12, you're at $18 or so. Don't worry about one-to-ones, okay? Got that $18, awesome. What about if you got to 39.24, you also have the 39.28, buy that for $12.50. If I can get out at 43, again, that's going to be some more money in my pocket. If you can do that, if you can take profit on both of those and then use that money as spending money, okay? As money that you're able to go in with and place that on other contracts, okay? Right now we have a upward bias. That doesn't mean crap, by the way, okay? Google could fall $100 just as much as it could go up $100, okay? But if things come in with expectations or above expectations and they really blew it out of the water with adding on all this new commerce stuff, with Google Glass coming out, with their mobile ads, if they got their cost in line after the recent acquisition that they made, if, all that stuff looks pretty and lines up, then we could be looking at, a nice big move on Google. So here's my just initial entries. Now, I'll be adding in a lot more contracts before the day's over, but just so you can sort of see where I'm at. So as of this moment, I put on 40 contracts. I got 10 contracts on each layer so far. and I'll probably end up with 100 or 200 per level there. But you can see I'm up about $90 already on our short side, down about 80 on our long side. 80, 90 is fluctuating around. Now I'm up 110, down 90. So I'm net positive overall in the position. And right now I'm just going to watch it. Because it's a little bit different trade, but it's a strangle. I don't do strangles that often. You almost always see me doing straddles because I like how they work better. My problem is with doing a straddle over on Nadex is what? Why am I so big on not doing straddles on Nadex? Well, let's look at why. That's a good question. Let's check out why. Well, the problem is I don't usually do straddles on Nadex on NASDAQ because NASDAQ takes in whole points on Nadex. So if we go over here and we look at this, you're going to see really quick that it's literally just ticking in like whole increment points. And we actually tell you that on the right side of the page. Tick size 1. It doesn't tick in quarters, it ticks in points, which means every tick is worth $1, which makes it cheap, but also makes it where if it moves 30 points, that's a $30 move, okay? Well, is that good or is that bad? Well, it could be either. Let's look at what's available. We got the 415s right here. You're going to want to get the cheapest 415 you can. So we'll get rid of that one, that one, that one, and that one. That gives us 2 left. One's 80 wide, one's 100 wide. If you're going to do it, you might as well go for the one that is 100 wide. But, I don't know. We may decide to come back to that. We'll come back. We'll look at it. We might put on a little straddle for fun. Let's go down here. Let's look at the sell side. Sell side, and then I'll clean up all this stuff on here. Okay, these are all of our 415s. So, like as you see, my process often is I'll select them all, and then I'll just well, I don't want that one, don't want that one, don't want that one, that one, or that one. Why? Because the risk is so high. And then I'll look at the other 2 that remain. I'm like, okay, so we're not really doing anything with a risk greater than $30 and expiration less than 415. So I'm going to say, give me everything that doesn't have a risk greater than $30. And I want at least, let's see, how many minutes are there till expiration on that? There are 151. So I'm going to say I want at least 100 minutes till expiration. May want more than that, but I think that'll do it. There we go. Okay, so now that just knocked a lot of stuff out of the way. Now these are all of my contracts that are available for me to trade over on US Tech 100 on the spread side of Nadex. Now, out of these I got to make some choices. $26 a risk. That's not going to work. Okay. $27 a risk. Really not going to be good. So now let's go ahead. Let's filter that down even further. Let's drop this number to a maximum of $15. Okay. Now we only have a few choices. We've got 2 buys and a sell. We only got 1 sell choice on the plate there. That's not too bad. It's a $12 risk, 6 point to break even, which means, by 5-6 points of intrinsic real value. I like that contract if I'm going to trade it. And then we got 2 other ones. We got one that's $2 risk, which is ridiculously awesome. Problem is it has to move 28 points before you even get that $2 back. That's pretty stupid. So let's go ahead and go with the $6 one that has a 12 point to break even risk. This is how the analyzer helps me. I'm not having to analyze all this stuff. Man, if you do this inside Nadex, you are all over the place. You're clicking everywhere. You're trying to do all this math in your head. I'm not doing any math. I'm just staring at the thing. It's telling me in black and white, or orange and white at the moment, right? $11 risk, 6 point break even. $6 risk, 12 point break even. Okay. So what is that going to tell me? That tells me that NASDAQ's going to move up or down basically 18 points for me to make any money. Okay? Like, after that, then I can actually start, bringing in a little cash. Is that realistic? Let's go look at the chart before we just make the trade. So 18 points. If I go in and add this in, and we go, okay, so we got 15. That's going to put us at 39. Oh, yeah, that's not too bad, is it? 39.08. So after that point right there, am I right on that? Let's see. No, it's a little bit higher than that, isn't it? Yeah. So again, that's why I like my friend Excel. And let me put that back up there. Let's just do a really, really simple math formula. The price is, what, $38.95. So we're going to have that plus 18 and that minus, oops, get a 38.95 minus 18, 38.77. So if we look at this number right now, because now we're down at the 0.7, so we moved a little bit on ourselves. But that'd basically be we have to go to 39.13. Well, that to me is very realistic. Okay? And then we're going to have to go down to make any money. We're going to go the downside down to 38.77. That's pushing it a little further than I like, but it's not completely out of the realm there. It's just, it's past our 1 deviation level. I don't like that. It's past our spike strike magnet price level. I don't really like that. But 18 points up or down. And, okay, so 18 points doesn't really seem like that big of a deal in relation to, a 100-point potential move, right? Now, that's on Google. That's not on NASDAQ. But let's say we get, 30 or 40 points. Is it worth it? Well, we're going to risk like $12. If we got 30 points, we'd make $18 per contract. That's not bad. Comparative to some of the risk we're looking at over the binaries, it's actually not a horrible trade. And this was 80 wide. The 100 wide was just not worth it. That one's 80 wide. The 100 wide again was not worth it. So I think this could actually be a good trade. If we get and we have to get a large move, but if we don't, if it only moved like 10 points, we're going to get, $10 back is basically what this comes down to. So we can go on. We can look at this as being another layer potentially on the trade that could be put on. And it's a little bit less risk than the strangle is. Normally, the straddle will have a little bit more. But in this case, it's a little bit less. I'm not going to go all in on this. This is more of a just for fun. Let's check it out. Okay? So I'm going to go in with like a contract. And, again, it's not the normal trade that I make. But, I just want to sort of, play with this and see sort of how this one plays out for us. We haven't really added in straddles over there, over on the Nitix platform, making sure I'm getting filled and everything. I am filled on everything, so that's good. So we'll go in and load this up and put it on. And let me see if I see anything else that we can do. And this IV can really change a lot on us intraday. So we're watching all this. So let me mark this down. Our spread straddle on US Tech 100. So we're looking at a buy. The 3,900 to 3,980, just in case you didn't get that. We got in for a price of 3,907. And selling the, 3,820 to 3,900 for a price of 3,891. Okay? Just so you got that trade right there. All right, we'll be back right after this break. We'll need to start looking at our take profit orders. All right, stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. It's pretty cool seeing just an improvement on the Nadex platform compared to the scanner. Had some traders were looking at something. We noticed the price was stuck in the platform. And let me show you this right here. If you go over to the platform, it says it's stuck at 27.50, 33.50. When you open the ticket, it does update right there to 6.925. But check it out. Stuck right here in the platform, not stuck in the scanner. So the scanner is showing the accurate pricing of that contract at 6.925. So just one more cool thing, scanner doing a better job. So that's why I trade using the scanner. Okay, so again, we're going to keep an eye, just a tip for you, keep an eye out. Look for other potential trades. Implied volatility. We talked about this yesterday, and it's happening right now. We're actually seeing that we're up on both the long and short side on our straddle that we just put on. How is that? We're up $7 on our trade already. That doesn't sound like a big deal, except for it's pure implied volatility. It has nothing to do with anything else. That's why both sides are positive. Our shorts are currently outrunning our negatives, which is good. You can go for a 1-to-1 on the straddle, so look at what your total risk is, and add that to your bought price or subtract that from your sold price. That'll give you a 1-to-1 take profit if you want it. You can also just watch the market, but you better have a plan, at least at a deviation level or something, on where you're going to take it. So I'm just trying to get some of these ideas out to you before the show's over. If you're looking at the binaries, if you want to play it safe, then take profit on those when, we went in, we sold at 87. Take profit at 57. We sold at 82. Take profit at 57. Just boom, boom, close them out. That'll more than cover your risk on the other side and put some profit in your pocket. Okay? So that's the safe way to play it. Ideally, we'll get some nice, cheap, further out of the money binaries. Implied volatility is starting to flow into the market. And so, you can go in, you can figure out how exactly you want to play that, but I'm going to give you this simple conservative exit so that way you have some sort of plan. And that would mean if we went in on a 38.91, and that means we risked $10, 39.07. We risked 7, so that's 17. So add $17 to 38.91. That's going to put you at, I can't even add at all today to save my life. I have no idea why, but whatever. 38.91 plus 17. Take profit on that one at 39.08. So that'll be our little plan right there, 39.08. 39.08. And let me make sure I got that right. Hold on. No, that'd be too high. We gotta subtract that one. Well, let's see, 39.07 plus 17, 39.24. All right, so let's take the one we bought. Let's do that one first. Let's take profit on that one at 39.24. Okay. And that'll take care of the bought one. Place that order right there. And now let's take the one that we sold over here. Let's go in on sold at 38.91. And we'll subtract 17 from it. 38.74 is where we want to buy back. Okay. And so real simple, that's first. I may adjust that later in the day, but that's just a simple 1-to-1 take profit. That's basically the plan I'm giving you there. And the plan I'm giving you on the other ones, 57 exit on the bots and a 43 exit on the bots. So on your 2 bot contracts, exit at 43. And on your 2 sold contracts, buy back at 57. That's a simple exit plan for you. You see some wider ones, you want to put on some more, a little bit bigger, out of the money, nice big profits, check those out as well. Y'all have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.